What is up everybody, Gifford here and welcome back to another stock market video, and today we're going to be talking about two things. The first thing is how I made 100 New Zealand dollars off an options trade that lasted only over 2 days, and the second thing is I'm going to be going over a quick reasoning of why I sold some of my Tesla stock. So this isn't any advice to try to convince you to try your hand at options trading. All I'm doing is just sharing my journey here on the channel. If you're new here, welcome, and feel free to have a look at some of my older videos because I too only started stock market investing only about 18 months ago. I'm definitely not an expert and I'm no financial advisor. However, I do learn quickly on stuff I like. With that said, let's get on with the video. So here's proof of the trade that I did. If you don't understand it, I will link a video at the end of this video to show you how to do a put option. But from now, this here shows you that the price was 78 cents. And if you multiply that times 100, that's $78 paid for here. So what's important is that the time was November 4th. And you can see that the expiry was actually on November 5th. And what I did was I did a $65 put option on ATVI, which is Activision Blizzard. And you can see here is the net amount which I got paid, which was $78, and the commission which I had to pay $1.02, which isn't too bad. So if you're aware, it's currently earnings season, which means that all the companies are showing what revenues and what EPS that they've been doing, and during this time usually it's very volatile where the stock price can go up or down. So remember that during the year they have 4 earnings, which is Q1 all the way up to Q4. And this particular one is Q3 for Blizzard. So right now during the weekend it's at $67.83, but if we go back a couple of days we can see that there was actually a big drop off, and this was because of some news during the earnings call. And if we drag our mouse just in there and down to the bottom, we can see that it dropped by about 15%. And that 15% drop is pretty significant because that's about, off the top of my head, $9 to $10 billion wiped out from the company, which is quite big. So moving over to Yahoo Finance, we can see the dramatic drop that's over here with Activision Blizzard. I just want to point out a few metrics, that its new market cap now is at $52 billion and it actually has a reasonable PE of 20. So if we have a look at Q3 2021, it says that they bet it by 0.02 cents and the actual was 0.72 cents and the estimation was 0.7. So that's pretty good. However, if we have a quick look at the financials, if you click quarterly, you can see that they've actually lost a little bit of revenue in this quarter compared to Q2. But overall, that's still a lot of money for this company, and their earnings look good too. So this article titled "Why Activision Blizzard Stock Plunged Today" will read, shares of ATVI fell 14% on Wednesday after the digital entertainment company postponed 2 major game launches. So here is a quote that's the main reason of why it plunged billions of dollars, is because while we're still planning to deliver a substantial amount of content from Blizzard next year, we are now planning for a later launch for Overwatch 2 and Diablo 4 than originally envisaged. And the second part to this is actually another analyst had downgraded the stock, so the stock price target from $108 all the way down to $75. And the reason for his downgrade, because of these delays, is now going to project lower revenue. And this is what happens when an analyst downgrades a stock. Everyone starts to sell off because actually a lot of people do listen to what analysts say. So in the morning when I woke up, I got a trade alert to say that Activision Blizzard had gone down a bit, and I had the company on my watch list because I'm actually familiar with the company itself. So I used to play World of Warcraft, which was quite a popular game many years ago, and I played that for a while. So I actually like the company and I know that they make a lot of money. They were valued pretty rich. So after analyzing the news article and to see that their revenue did not actually change that much, this drop here was significant and I didn't really think it was warranted by the market. It was just a bit of a panic sell-off. I decided to do a put contract on it for only 2 days, and it was actually paying quite a lot of money, which was $78 as you saw before. So the contract outlines I would be willing to buy 100 shares at $65. So I needed capital of $6,500 and I would be getting paid $78 for that, just for taking it on. And depending where the stock ended up, if it was higher than $65, then I'd just get to keep the premium. If it was lower than $65, then I'd obviously have to pay 100 shares at that. But I was pretty confident that it wasn't going to go any lower because it was a good company and I was basically just panic selling. So for those that follow me on Instagram, I sometimes post my trades there, and just to show you, one of the things I put on my trades is the annual return, because what happens is, even though this is only for 2 days, I actually count it over a week and then I multiply this out to 52 weeks. So this lets me know straight away, a quick calculation in my head, whether this trade is actually profitable and I should risk that amount of money in it. So how I do that, and I'll just show you now on the calculator, is that you get the premium that you get, which is 78 cents, and then you divide that by how much my strike price was, so it was $65. I then multiply that by 100% because it's a percentage, and then I multiply that by 52 weeks. This then tells me how much my annual return is, which is 62.4%, so that's very high. So out of my money that I'm putting in, if I did this for a whole year, I'd be getting 62%, which is huge compared to what the banks are paying their measly 1 to 2% return. And if you compare this return to the S&P 500, which gets about 8% to 10% a year, you can see it's 6 times, so it's pretty huge. It means that the premium was good that I got paid for it, and it was worth risking the capital, which was $6,500. Now the flip side of this is if I did get assigned these shares, I'd be happy to take 100 shares of Activision Blizzard because this is a cheap price for it. I know that eventually the company will go up in the long term because it's still a good company, it's still profitable, and it has a really good PE ratio. And I've done all my homework previously before this deal happened, and that's why I was ready to jump on it when opportunity presented itself. And honestly, it was a pretty straightforward deal, and to get paid basically 100 New Zealand dollars for that deal on a good company was just too good to miss. And many years ago, $100 was actually pretty difficult for me to save, so I find it very amazing that one deal made me $100 basically in 2 minutes. So the second part to this is that I sold Tesla stock, and for very good reason, which I'm going to go over. As you can see, it's been hovering around the $1,200 mark, which is quite extraordinary. If we go a couple of days, we can just see it's just rising and rising and rising. So looking at the 6 months of what Tesla has done, it has a return of 84%, which is pretty extraordinary. If I grab my cursor here, we can see that it's pretty much doubled, 100% return on the stock, which is already, I think, quite high, very rich. But again, this is Tesla, and this is what happens with the stock. So looking into why this happened, good old YouTube, we can see here that what actually happened to Tesla is that it had a gamma squeeze. So quick explanation on a gamma squeeze. A gamma squeeze is usually extreme, forcing investors to buy more stock due to open options in the underlying stock. A gamma squeeze is behind what happened in early January 2021 as shares of GameStop and AMC Entertainment Holdings rose suddenly. So pretty much what's happening is that people are playing around with options like I do. So when they buy this, the outcome is that they're actually buying more stock of Tesla, which is forcing it to go up. And that's why I've decided to sell, because I think it is very overvalued right now. And I would explain more, but it's pretty complicated and I don't actually understand a lot of it myself, so we'll just stick with that. So here is a screenshot of my Hatch account, and this is just to prove that I did sell some Tesla stock. So as you can see, my current value in US dollars in Hatch is $8,600, and I've got a return roughly of $3,424, and my average cost is now obviously a little bit higher. And we see here on the 5th of November I decided to sell 2 shares at $1,233, and I sold on the 2nd of November, I sold one of the shares again for $1,193. So the main reason why I sold the shares is because my price target for Tesla by the end of 2021 was $1,200. That was my plan, and if it hit that, I was going to take some profits. The screenshot here, you can also see that I've got 7 Tesla shares left, and it's 87% of my total portfolio for my Hatch. So what I'm going to be doing is I'm going to actually sell, I think, another 3 shares as the price goes up, if it ever reaches there. If it doesn't, I'll just keep my 7 shares, and then when the price, I think, will go back down, it's just my opinion, I've hit my end of year 2021 target for Tesla. I'm taking some money, and you can see it's quite a substantial amount. It's like $3,500 US dollars. So once the stock will come back in, I've got extra money to buy more Tesla stock. Sticking with the plan, that's what I had, and I'll continue to do that. So now you can see that a majority of my portfolio is into options, and that's because I want to increase my passive income every week, and this helps me to buy more stock later on. So coming up this week, we have Tattooed Chef earnings as well, so that's going to be pretty exciting. I currently hold 800 shares of that. If there's going to be a big drop down to the $16, I'm obviously going to buy more and use some of my option play to try to get some of the stock and also get paid for it. So not sure what will happen. I'll probably do a video on the outcome of that and how I'm playing that and trying to get some money from it. The trading platform I use is Interactive Brokers, Hatch Invest, and Sharesies for individual companies, and I use Invest Now for index funds. If you want to start your investing journey, make sure to see my referral links down below or hit me up on Instagram. Before you go, please hit like on the video as it helps the channel out, and if you're interested in investing, feel free to subscribe. As always, safe investing, and make sure you do your own due diligence in the stocks that you buy. If you have any questions, just drop me a comment down below. May the gains be with you, and I'll see you on the next one. Goodbye.